Robert Prechter warns 2008 financial crisis was not the big one. Why long bond TLT is now trading the same way as stocks. Robert Prechter, famous for Elliott wave theory, has been right throughout 2022. He called 2021 the major top in all market. In fact, he said 2021 was the everything bubble. This is a headline from Bloomberg. He said that is a great summary of how people feel at market top. The headline is Wall Street stock analyst. Echo crypto bulls seeing nothing but gains ahead. He said, well, today is a different world. We are already in a bear market. But has this new inflationary regime run its course? A lot of famous companies have lost over 60% to 90% of its value. Is that enough? For example, Meta lost 64%. Netflix lost 60%. Shopify lost 80%. Nvidia lost 61%. Snapchat lost 90% of its value. Isn't that enough, or are we still going down even more? I will explain what Robert Prechter thinks about all these right after this. And you know Robert, he always has something to back up his thoughts. Stay tuned. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these markets, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning to your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want it to be real. You want it to be true. You want to be my client, don't you? Today, Bitcoin is down 70% from its high. That's a pretty big decline. The S&P 500 down 26% from its high. Nasdaq Composite down 35% from its high. Nasdaq topped in November. Kind of following the long bond TLT topped at the end of November. Just think about it. Treasury bond. The highest quality of the bonds TLT has been falling almost a year, down about 38%. Compared to junk bonds, the lowest quality of the bonds, only down 15% from the high. You would think high quality means less risky, and you will be wrong this time. People are so complacent, so optimistic, that they were willing to buy bonds of companies that were very close to bankruptcy, and perfectly happy to do it. It was paying a little more than U.S. Treasuries are paying. It even outperformed S&P 500 this year. What about the interest rate? 10-year Treasury yield is up 1,200% since the low in 2020. Everything is unbelievably upside down. The only thing that made sense is the big jump from the commodities. He said they have rooms to go higher, which is obviously not good for inflation to cool down. Has the inflationary regime changed yet? You probably can guess it. You probably can guess his answer, the commodity prices. He said, my answer is no, not even close. He said there is plenty of room on the downside. This chart shows Bitcoin from its inception. Not many people know that Bitcoin started at a penny. It has went up 7 million times. He said he doesn't know anything that have gotten remotely close for going up that much. In the history of investments for just 12 years, $70,000 a coin. That's unbelievable. So yes, it's down 70%. But he thinks there is plenty of room to go lower if it wants to. S&P 500 up 75 times from its 1974 low. There is plenty of room to fall. Nasdaq Composite up nearly 300 times in price from its low in the early 1970s, and that certainly has plenty of room to fall as well. He thinks interest rates have plenty of room to rise. This is an updated chart of 78-year interest rate cycle chart. You can see from 1942, that year was start of the World War II. We started the rising rate ever since the low of 2020. On the percentage basis, that's a huge number. 1,200% on the 10-year Treasury note. Robert also thinks the stock market is way overvalued based on S&P companies' book values and dividends. Price to book value nowadays are not used to value companies almost by any investor. 2021 was the highest dot on this chart. We had very low yield, the highest ever book value ever recorded at year end, which is at 7 times for S&P 500 companies. That's why he doesn't think this bear market is over. Not even close. These valuation will at least come back to the normal area. He also believes when the market gets too far from on one side, it usually will go too far on the other side when it comes back. So he thinks we are going to see undervaluation in the next a few years when this bear market is finally over. Since the interest rates is going up, dividend yield of stocks must go up to be competitive with bonds. This chart shows 27 out of 28 years of Dow dividend yields lower than those at the 1929 high of 2.83%. That was the most overvalued market in terms of yield, which we have seen all the way up until the late 80s, started mid-1990s. It persistently remained below the lowest yield at the top minute of the stock market high in 1929. That was just in wave 3. And the 1932 bottom was wave 4. At 2021, top was wave 5. He said the fifth wave always reach a higher valuation than third waves. The last wave was all part of the funny money environment. We are in a new paradigm here as interest rates lead dividend yield higher and stocks and bonds lower. Sadly, party is over, I guess. He thinks the future we are facing, it's going to last decades, is going to be a shift away from valuing stocks really highly towards valuing things really highly based on the supply chain shortage. He thinks stock prices will fall for sure. Commodity prices are arguable. One way to take advantage this rising interest rate environment given by Robert Prechter is something that nobody knows about. They are called floating rate notes. FRNs, they are issued by the U.S. Treasury. They are good for 2 years, but you are not locked into an interest rate of 2 years. They reset the rate every week, according to the 13-week Treasury bill. They are giving 3.5% and rising interest rate, so you can take advantage of the rising rate. And they pay you the current rate all the way up. Other bonds lock you in. If rates keep rising, you get a capital loss, and you are locking in a low rate. You're sitting there stuck in a 3% yielding bond, and they go 5% and 8% and 12%. You wonder, what in the world have I done? You can't get out unless you take a capital loss. This takes care of that. You can read about it at treasury.gov. Just type in floating rate notes. In the end, he said the Fed can't do anything about it. The Fed is going to be a victim of this thing as much as everyone else. They are already starting looking incompetent. People started to get angry at them. He said the Fed doesn't set any interest rate policy. They do set monetary policy when they agree to print more money to accommodate the government. They could say, no, we are not going to do that this time. But in interest rates, they have zero power. What the Fed has done and is still doing today, what it will always do, is simply follow the market rate. It follows a Treasury bill rate with an average 5-month lag. They are being manipulated by the market waves, not vice versa. So now I'm going to show you my client Juliana Wood's book, Burning in the 2020 Flames. And my client Teddy Eazzy's book, Wicked Pussy Perfume. It's an erotic novel. Order your copy today. And my book, Beautiful Ocean of Money and Dreams. This one is so amazing. And my book, again, You Hold the Magical Key to Your Success. You're such a good boy for watching my video right till the end. Thank you for pushing my button. Bye.